So, hello everyone. This is me, Maya, from Dukascopy Analytics team, and me together with Alexander are here today to discuss the economic data release on the UK visible trade balance. So, what we are going to do is, as usually, first of all, I will discuss the fundamental part of the release, and then Alexander is going to continue with the positive surprise strategy, and also he's going to comment on the market reaction. So this rating is actually important for forex traders, as export demand and currency demand are directly linked, because foreigners must buy the domestic currency to pay for the nation's exports. So the trade balance reading is usually released 40 days after the month ends. So today we will have a reading on the month of February, but now let us first have a look at what happened over the previous months. And you already see the chart on the whiteboard, which shows how the reading developed throughout the last 2 years. And but if we look at the couple of last months, so for the month of January, the trade balance widened to minus 9.8 billion pounds compared to December's reading, when the visible trade balance was at minus 7.7 billion pounds. Now, getting back to the day's release, the UK February trade balance is expected to show deficit at 9.2 billion pounds. Just let me put two charts on the whiteboard. Yes, so the first one is, as usually, the summary of Bloomberg survey. And here we also see all 15 estimates that Bloomberg gathered from various different economists. And if we look at all 15 estimates, then we still see that, well, we don't see, but 47% of economists see the trade balance still widening, but we also see very optimistic forecasts from Howard Acker, for example, who ranks as the first in terms of his precision in making forecasts. So yes, apart from that, we are then here expecting a solid improvement in the UK economy, because we have seen a constant improvement in foreign demand and eased debt crisis in the Eurozone, which is the UK largest trading partner, and in the meantime, confidence levels are seen edging up too. Now, last thing that I am going to do here is to put a chart of fundamental analysis contest on the whiteboard, where we see how Dukascopy community members think a particular event will impact various currency pairs. And this time we asked for, of course, the impact on Great Britain pound USD currency pair. And yes, here actually we see that our traders see this event having a bearish impact on cable, with 56.3 votes for bearish impact on the pair. So yes, and if you are willing to take part in this contest, just go to the section community and search for fundamental analysis contest. So that was all from my side, and now I will invite Alexander to the whiteboard, who will continue with the positive surprise trading strategy and market reaction.
Thank you, Maya. Hello, everyone. Yep, today we're discussing the UK trade balance, and actually, first of all, I would like to point out that earlier this week, the British Confederation of British Industry pointed out that exports rebounded sharply after a drop in January. Therefore, we can brace ourselves for strongly positive data today. However, I would like to point out that we do not expect markets to be highly volatile after the release of the data, as we see that during the last 5 months, the average market reaction was around 8 pips, so not really impressive. Therefore, our trading strategy will be based on the cable, and as you see from the chart, we recommend placing the take profit just 10 pips from the market price, and actually this level is represented by 2-day high and 4-hour resistance. So it's most likely that the pair will stop around this level. Therefore, we recommend placing the take profit at 167.55. And as always, the entrance point at the market price, which is currently 167.44. Sorry guys, just a small typo right here. Just a second. Yep. So here we go. Regarding the stop loss, we recommend placing it around 167.44. So practically at the market price. And actually, as you see, the pair struggles to go any lower from this level, as 200 minute simple moving average and 4-hour pivot are holding the pair and limiting its depreciation. Therefore, once again, we recommend placing the stop loss right at this level. So, as to the market sentiment, I guess you all remember that it's strongly bearish, as almost 60% of Dukascopy traders are selling the pair. Meanwhile, traders do not believe in the strong fundamental data from the UK, as they are selling the sterling in 56% of the time, and at the same time, attitudes towards the greenback remains strongly bullish. However, as you can see, in the longer term, traders still expect pair to appreciate, as a slight majority of pending orders in the 50 and 100 pips range are placed to buy the pair. Once again, traders expect the sterling to appreciate versus the greenback in a longer term. And regarding the market sentiment provided by other market participants, here we see that traders at 3 different brokers are quite universal, as a vast majority of them actually are also selling the pair currently. So, speaking about technical indicators, here we see a slight shift towards the positive sentiment when compared to yesterday, and also we see that indicators on the short-term time frames are sending sell signals, meaning that in the shorter term the pair is still expected to depreciate. However, in a longer term, we see that indicators on the 4-hour, daily, weekly, and even monthly charts are supporting the case of pairs appreciation. And if I recall correctly, yesterday only 3 of them were sending buy signals. So, 1 minute left till the news release, and I guess it will be worth switching to a daily chart. And that's actually daily charts and the channel up pattern. And here we see that yesterday the pair has received strong bullish buys from stronger than expected manufacturing data, and currently we see that in a longer term perspective the pair is approaching its recent high and weekly resistance around 167.85. So the data is already out, and we see that figures came slightly stronger than expected. Nonetheless, the market reaction is modest as we already projected, and actually the initial market reaction was just 3 pips, even less than the average market reaction. So just a second, even trade balance to the non-European countries came stronger than expected. However, once again, the initial market reaction is rather modest, and we see that the pair is still fluctuating around the recommended stop loss. However, as we assume that the data came stronger than expected, then the sterling is likely to receive another additional support, and therefore the pair can appreciate. And once again, the key level for long traders, that's a weekly resistance and a recent high around 167.83. However, at the same time, we should not exclude that pair will move lower, and therefore short traders should obviously focus on the weekly resistance at 167.35. Yep, and I guess that will be pretty much from my side. And even though the pair was not able to reach the recommended take profit, I hope the trading strategy was useful for some of you, and I'm giving the floor back to you, Mike.
Yes, thank you very much, Alexander. So we have the UK trade balance data out, better than expected. So that was all from our side for the economic data release. But before I finish up, I would also like to remind you that we have two webinars on the Visual J Forex, one in French and the other one in German, in case you prefer any of these languages better than you prefer English. Yes, and don't forget to tune in our Dukascopy into our Dukascopy research webinar at 12 GMT, as we are also discussing the latest release of community forecast there. But for the moment, that's all. Enjoy the webinar with Louise Sprink, and see you later. Bye.